one of the questions that we're often asked is, my value increased by, let's say, 25%. Well, why did my taxes increase by more than that, or by less than that? Why isn't it the same amount of increase or decrease as my value change? Well, I'll share with you one property example that happened in the city of Conneaut, just to kind of highlight how changes in value don't really correlate directly with changes in taxes. And typically, this is an example that actually benefits property owners because of the equalization aspect of not having more revenues from local governments. In this case, this will not benefit the property owner, but the property owner agrees with their value. And so unfortunately, they must pay their tax burden because they have no disagreements with where the value is now. So in 2019, last year, their 2014 revaluation old value was $51,900. Oh, you can tell I've not used this pen very much. So that one's going out. I'll use the orange one. That'll work. It was $51,900. That was their old value. Their new value, based on our 2020 revaluation and what the market has been telling us in their neighborhood for their property, is $79,400. Now, that's an increase of 35% in value. Now, over 1 year, that would be excessive, absolutely. But remember, this 2019 value is actually over 6 years. It's based on the 2014 revaluation numbers. And so that increase, the property owner does agree, if they were to sell their property today, that they would get roughly $79,400 for their property. Now, Conneaut as a whole, and this is going to be important later on down the road, Conneaut as a whole increased their residential values by 9%. So his value increase was significantly more than the district's value increase of 9%. Now here's where it gets a little bit tricky, taxes. In 2019, this property owner paid $1,075 in taxes. Now in 2020, and my colors have gotten all screwed up here, but that's okay. In 2020, the property owner is being charged $1,613 in taxes, so an increase of almost $600. In 1 year, yes, that is excessive, but we'll get to that calculation. This was, for the property owner, a 67% increase in their tax amount. Quite high in 1 year. And so his question is, well, why, if my value increased 35%, didn't my taxes increase 35%? Why did it increase almost double of what my value changed? And there's a couple of different reasons. One, there's a new fire levy in Conneaut. Now this new fire levy cost him, it's a 3 mil fire levy, $76.83. That's part of that increase. So about one-fifth, 1/6 of that increase is due just to that new levy. But where's the rest? Why is there still a massive increase and change difference? But now we're going to get to the tax rates. So tax rates are actually what our office determines and assigns to your value, your market value. The tax rate, what our role in that is essentially to make sure that that rate applied to the district keeps government revenue roughly the same. There are most levies that actually, they do not increase or decrease revenue every year, whether values go way down or values go way up, they keep revenue the same. Other levies and inside millage, they do increase and decrease with changes in valuations for the district. Now, in 2019, his tax rate was 59.1849 mils. Remember, a mil is $1 per $1,000 of value. And that's what we would charge to his value back in 2019, 59.18. By the way, all of our surrounding counties, Northeast Ohio, are pretty much double this. That's one thing to keep in mind. Now in 2020, his tax rate decreased 58.047 mils. So he actually saw a decrease of 1.9% in his tax rate. So one would say, wait a second, if my tax rate's going down, then certainly my taxes should go down. Well, that's not the case for a property that increases in value to his level. The tax rate decreased because Kanya overall increased 9% in their value. And so we had to keep the government revenue equal, roughly. So with the increase in value, what you're actually being charged decreases to bring about the same net amount of revenue. Now in this individual's case, because his value increase was significantly higher than the district's value increase, he now has a higher portion of the district's value than what he did prior. So that means that now his tax burden is a higher portion of the district's tax burden than what he had prior. Even though the tax rate went down, his tax charge increases. The folks that may have increased in Conneaut by 9%, 8%, they actually would have seen a tax decrease on their tax bill, even though their value went up, because their tax rate went down and that charge went down. And all of this is to make sure that government revenues stay equal. Now for a case like this does not help the property owner, but for a majority of cases, majority of properties in the Conneaut district, because that average was 9%, they will actually see either a tax decrease or a rough tax stabilization amount this year. Keeping in mind though, with that 3 mil fire levy, taxes did increase in terms of money coming in for Conneaut City and for those local governments. So if I didn't thoroughly confuse you here, feel free to reach out and ask questions on this. But this is one example of where tax rates, tax burdens, and values, how they all interplay together to get to what the property owner pays as opposed to what they paid last year.